To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Friends, let us now have a look at a question on preparation of financial statements. This one is from RTP May 22. Okay, we'll try to solve it as close as possible in examination conditions and see how much time do we take. Now, when you get a question on preparation of financial statements, what is important is what are the particulars which are given, forget the amount for now, and what are the additional information given. That is what should be your focus. Okay, so let's start looking at it. Following is the trial balance of Delta Limited, fine. 31st March, fine. Figures are in 1000. Okay. Now, why is it important? Because in the additional information, numbers may not be given in thousands. So, accordingly, you will have to do the adjustments, right? So, if you look at the particulars, you have land at cost, okay, fixed asset, then you have calls in arrears. So, calls in arrears will have an impact on your equity share capital, cash in hands, plant and machinery at cost. So, this one is a PPE item, this one is a property, plant and equipment item. Then you have trade receivables, inventories as on 31st of March of 21. Now, if inventories have been given as on 31st of March of 21 means the impact on purchases is already done. Okay, so you need not adjust it again. This will be directly shown in the balance sheet. Then cash at bank is given adjusted purchases because they have given this inventory, they have given directly adjusted purchases. Then factory expenses, admin, selling, debenture interest. Okay. Then equity share capital, you'll have a note for this. Debentures, you'll have a note for this. General reserve, P&L balance. This is the opening P&L balance. It will go to your reserves and surplus note. You have securities premium, sales, securities premium again reserves and surplus, sales, trade payables, provision for depreciation. Now this will be for this P&M because they said plant and machinery at cost. So this depreciation will knock off that amount. And you have a suspense account. You have to see what is the information related to suspense. Okay. I did not read the numbers because that number reading is not relevant for me now. Okay. Then quickly run through the additional information. Authorized share capital is 80,000 of 10 each. Okay, notes to account, it will be useful. Company revalued land at 960 means what? Land at cost has to be revalued and shown. You have to show a revaluation reserve as well as land at the revalued amount. Then equity share capital includes 50,000 issued for other than cash, disclosure requirement. Then suspense account of 10,000 represents cash received from the sale of some of the machinery at on 1/4/2020. The cost of the machinery is 24, accumulated depreciation is 20. So 24 minus 24,000 is the book value, 10,000 is the sale value, so 6,000 is your gain, which will be your other income. Balance plant and machinery is before the adjustment of sale of machinery. Okay. P&M to be depreciated at 10% on cost. Balance of bank includes 5,000 with ABC Bank Limited, which is not a scheduled bank. You have to show it separately. Make a provision for income tax at 30%, okay. Trade receivables of 50,000 are due for more than 6 months, again a disclosure requirement. You are required to prepare the balance sheet and P&L as on 31st March of 21 as per schedule 3, ignore previous years, okay. Now it took me about 3 minutes to read this question. Now after reading this question, we need to start preparation of balance sheet, P&L and notes to account. So what you do is in the examination, leave one full page for balance sheet, leave one full page for P&L, leave 2 pages at least for notes to accounts, and then you can do working notes if any which is required, right. So we have this format for balance sheet, for P&L, and we have for notes to account as well. Now when we start preparing balance sheet, we have here equity and liabilities, right. These are standard format. Then under equity and liabilities, you have shareholders fund. Under that you have share capital and reserves and surplus, right. Then for each of these you will have a notes to account. So share capital and reserves and surplus will have notes to accounts, right. So let us go to the notes to account. Share capital. Now under share capital we have equity, share capital. For this, how much is authorized? If you look at the question, it says authorized share capital is 80,000 of 10 rupees each. So each, it makes it 80,000 into 10, 8 lakhs. 8. Now don't write 8 lakhs fully, you will write only 800 because we have shown amount in thousands, right. In this, how much is issued, subscribed and called up? So if you look at the question, equity share capital, shares of rupees 10 each, 500. So amount in the credit balance of equity share capital is 500. What does that mean? 50,000 shares of 10 rupees each. And then we have calls in arrears of 5. And out of that you have calls in arrears of 5,000 which you need to reduce, right. So 50,000 shares at rupees 10 each, that makes it 500, that 500 and thousands, that is 5 lakhs, less calls in arrears, that is 5. So what I will do is I will write this in the inside column, 500 and less calls in arrears minus 5 minus 5. So you get 500 minus 5, 495, right. Now this amount of share capital will be shown in the balance sheet. So immediately what you do is you go to note number 1 here, and I can actually link it. You can write it down manually, 495. So if you follow this step by step approach, you will not miss out on any items, right. So here what have we done with? We are done with this. So you can put a small tick here with a small pencil, and in this calls in arrears is also done, right. Now calls in arrears is also done, right. You can put a small tick. Now coming to the other items, we have reserves and surplus, but that is possible only after preparation of the profit and loss account. So we will leave that for now. Now we will move to the next item, which is 10% debentures. Now 10% debentures of 300, 10% debentures of 300. This is an item of long term borrowing. So you will prepare a note for that, and you will show it in the balance sheet. So here you will have non-current liabilities, right. For there you have first one, long term borrowings. Okay, don't write 10% debentures here. That has to be shown in the notes to account. You have to follow the schedule 3 format compulsorily. Note number 3 for this. And if you look at the question, you know that the amount is how much? Amount is 300. You can write directly 300 here, but please note you have to make a note for this as well. So come to notes to accounts, leave some space for reserves and surplus, prepare note number 3, that is long term borrowings. What is that? 10% debentures, and it is 300. Okay, so with this we are done with this item also. So you can put a small tick here. General reserve, we'll just plot the balances, and then we will take it from the notes to account. So for general reserve, prepare this reserves and surplus. So you have general reserve 150, you have general reserve 150. Okay, then so this we can just put a tick. Apart from that, you have securities premium 40 for this also you can put a tick. Then you have P&L opening balance 75. So P&L opening balance 75, add current year balance. Okay, so whatever is the balance, we'll add it and we'll get to the number. I need to add few rows. So I need to add few rows. In examination, please feel free to leave additional lines, nothing will happen. Okay, if required, leave one more page for notes to accounts, but don't try to fit everything in a single page and you are finally the answer looks very dirty. Okay, don't do that, right. So we have put opening balance number, we have plotted here. So we are done with this, we are done with the opening P&L balance. Then is there anything for this? Nothing is given here. Suspense account has to do with the sale of machinery, we will handle it separately, right. Now we are done with the credit side item. Now coming to the debit side item. Now looking at other items, we have sales will go to P&L, we'll prepare it separately. Trade payable is a current liability, right. So that for that we have to put an item here. So coming to this part, non-current liabilities, current liabilities, trade payable. Okay, now for trade payable we don't need to prepare a separate schedule because it's given as trade payable in the question itself. How much is trade payable? Trade payable is 30. How much is trade payable? Trade payable is 30. So put 30 here, right. Now apart from this, we will have a short term provision. Why? Because there is a provision for taxation. So B, short term provision, which is provision for taxation. After preparing P&L, we'll get to it, right. Here you can put a note for this because provision for taxation, because here we are showing short term provision, actual item is provision for taxation. Okay, with this we are done with the liabilities and equities, right. Now coming to the asset side, I'll have a total here, do it later, right. Then on assets we'll have non-current assets, right. Now so in the examination, if you are confused with the sequence of numbers, you can put the numbers later also. You can just put the amounts and later on you can just plot it in a serial order, that will look better. Okay, so you have non-current assets. Now for non-current assets, definitely we will have a note. So we will have a note number 5, we'll have note number 4 for short term provision, and then we have note number 5 for property, plant and right. So actually it's not a non-current assets, my mistake. So this will be by note number 5. Okay. Now when you have property, plant and equipment, what are those items? We have land at cost. Now what is land at cost? Land at cost is 800. So we'll take this amount 800, you can plot it here. right? Now there is additional information, right? What is the additional information? Additional information says company revalued the land at rupees 9,60,000. Means from 800 we have to move it to 960. Now please note all the adjustments have two impact. What is the first impact? Increase the value of land. What is the second impact? Increase the revaluation reserve. Before you do these two adjustments, don't move to the next adjustment. Or what I do is, let us say company revalued the land at 960. When I give the impact of the first adjustment, I'll put this kind of a tick here, and when I do the second adjustment, I'll put this kind of a tick here, which ensures that I have taken both the adjustments, right? So company revalued land at 960. So from 800, if you have to take it to 960, how much is the revaluation? 960 minus 800, 160 is the revaluation. So at revaluation 160, you get 960. Correct? Now this is the closing balance of only land, not the PP. Okay. Now this 160 will have a corresponding impact on revaluation reserve. So immediately, you can just put a line item here and say revaluation reserve 160. So with this, both the adjustments are done, right? Now coming back, so this is done, this part is completed. In items of PP, the other item you have to consider is the plant and machinery at cost 824 and corresponding thing from depreciation. So 824 and depreciation is 150, and there is a sale of plant and machinery. What is the sale of plant and machinery? Suspense account of 10,000 represents cash received from the sale of some machinery on 1/4. Cost of machinery was 24 and accumulated depreciation thereon being 20,000. Means from the cost you have to remove 24,000, from accumulated depreciation you have to remove 20,000, and there will be an item of profit which we will have to show in other income. Okay. So plant and machinery at cost. Opening balance. How much is the opening balance? 824 less cost of plant and machinery sold. How much is sold? 24. So minus 24. Okay. Then is there any addition details? There are no additional details regarding purchases, so we will ignore that. So closing balance at cost. How much is the closing balance at cost? 824 minus 24, 800. Okay, 824 minus 24, 800. Now, from this we have to deduct depreciation. Now, depreciation, which is accumulated balance, you have to see opening balance. Opening balance, then less disposed of. A portion has been disposed of, and add current year depreciation. Okay. Now, please be careful. Opening balance of depreciation, what does the question say? Opening balance of depreciation is given to be 150. So, 150 is the opening balance. From this, depreciation pertaining to assets sold is 20. So, minus 20. Then, how much is the current year depreciation? The question says depreciation is to be provided on P&M at 10% on cost. So, on this 800, because out of 824, 24 is sold, on this 800 you have to provide 10%. So, just write here 10% on 800. How much is that? That is 80. Now, will you reduce this 80? No, you will add this 80 because this is the increase in accumulated depreciation. So, 150 minus 20 plus 80, you get 210, and what is the net balance? Net balance is 800 minus 210, you get 590. Now friends, here we have touched upon multiple adjustments. What are the multiple adjustments? One is suspense account. We have done the first treatment, so I'll just put one line here. Okay. Then, and depreciation also I have done one adjustment, I'll put one line here, and the impact of this will also have to be shown in the respective places at P&L. Okay. So when you come to profit and loss account, the first item you have is revenue from operations, right? For this you will have a note. What is the sequence of note? We have not yet completed this, so we will plot the note later. Then we have other income. Okay. Here we will have to show the second impact of sale of machinery. Now we will fill this number slightly later so that we have a continuity in the notes numbering. Now coming back to the question, we are done with land, we are done with plant and machinery. So non-current asset is done. Now we have to move on to the current assets. What are the current assets here? Current assets, if you see quickly, you have inventories, you have trade receivables, and you have cash in hand, and you have cash at bank. Okay, so you have inventories. Inventories, the number is directly given to you as at the end of the period, so no notes are required for that. How much is the amount? Inventory is 96, so just do 96 and put a tick here. Then trade receivables. Will we need a note for trade receivables? Yes, because we need to disclose how much is outstanding for more than 6 months. So for that we will prepare a note, note number 6. The total amount does not change though, trade receivable 120, so 120 is done. Then the third item is cash and cash equivalents. For this one more note, because we have cash in bank, right? So come down, prepare the respective notes. 6 was for trade receivables. So it says trade receivables of 50,000 are due for more than 6 months. This is not an adjustment, this is just a disclosure requirement. So one time adjustment is fine. 50,000 are due for more than 6 months. So here you say outstanding for more than 6 months is how much? Is 50, and others is the balance amount. And how much is the number? Trade receivables 120. So this is also done, right? Trade receivables is 120. So 120 minus 50, you get 70. So the total is 50 plus 70, 120, right? Then you have one more note for cash and cash equivalents. So now you have cash and cash equivalents. So you will have cash at bank with scheduled banks with others, 2 numbers, and cash at hand. Okay. Now if you come back to the question, cash in hand is 2000, so you will put that. Cash at bank is 28, out of this 5 is with a non-scheduled bank. So with scheduled bank is 23, with non-scheduled bank is 5, and cash in hand is 2. So if you sum this up, 28 plus 2, you get 30. So 120 of debtors and 30 of cash and cash equivalents. Come back to the balance sheet. So you have 30 here. Okay. Property, plant and equipment, the net amount was 590. Okay. So we are done with the asset side with this. Then coming back to the question, we have plotted this number. This is done. We have not yet done this purchase and all. We'll mark it as we do it. Right. So we are done with it. Now we can move to the P&L. Now coming to the P&L, revenue from operations will be note number 8 and other income will be note number 9. Right. So revenue from operation and other income, then you get the total income, which is the total of revenue from other operations and other income. Then we'll have expenses. Okay. Now revenue from operation, note number 8, revenue from operations, sales. You can directly put it there because there is nothing additional to be disclosed, but still sales. How much is the sales? Sales are given to be 1200. So you can just put a tick here, 1200. Then other income. What is other income? Gain on sale of fixed asset. Okay. How much is that? You have sold it for 10,000 minus 24,000 was the cost and 20,000 was the accumulated depreciation. So 10,000 minus 4,000, 6,000 is the other income part which you have to show in the P&L. So 1206. Okay. Then coming to expenses. Now are we done with the suspense account also we have considered. Why? Because 10 has been taken and from other information the second impact is given in the P&L. Okay. Depreciation when we do, we'll take it off. Apart from that, this balance is already done. Okay. Provision for income tax, we'll do it separately. This all is done. Now coming to expenses, what are the expenses? Inventories we have shown in the balance sheet is done. Cash at bank is also done. Expenses we have adjusted purchases, factory expenses, admin expenses, selling expenses and debenture interest. Now these are the expenses. We'll list down one by one. Expenses, your purchases which are adjusted. Okay. We can say cost of material purchased and all of that. No detail is needed because it's given in the question directly. 400. This is the purchases. Then after purchases you generally have the employee cost. Employee cost is not given separately, so you can ignore that. Then after that, the next item that will come is the finance cost, which is debenture interest. So purchases is done, debenture interest of 30. Now you have to just cross check once whether the entire debenture interest has been provided for. Now if you look at the debenture balance, it is 300 multiplied by 10%, you can make sure that this 30 is the total debenture interest, right? So you have finance cost. For this you will prepare a note explaining that it's debenture interest. How much is that? 30. Okay, so come to note number 10. Debentures interest, which is 30. Okay. Then the next item we have is depreciation as an expense item. Depreciation. Now for depreciation, we already have prepared a note. What is the fixed asset note? Here we have prepared the depreciation, current year depreciation 80. So you can refer to the same note, note number 5. Okay. How much was the depreciation? 80. That is the depreciation for the current period. Then after that, are there any other expenses which you have to specifically show on the face of the P&L? No. So what we'll do is selling, admin and factory expenses will combine and show them as other expenses. Other expenses, note number 11. Other expenses. What are the items of other expenses? Factory, admin and selling expenses. Factory, admin and selling expenses. What are the numbers? 80, 45, 25. 80, 45, 25. Right. So that will be 80 plus 45, 125 plus 25, 150. Right. So this will plot it in the P&L. Other expense of 150. Right. So what is the total? Total expenses is 400 plus 30, 430, 10, 80, 510 plus 150, you get 660, right. What is the total income? Total income is 1200 plus 6, 1206, right. Now, profit for the period before tax. What is the profit for the period before tax? 1206 minus 660, you get 546, and tax expense. So provision for tax is 546 multiplied by 30%, which is 163.8, right. Now, this is the tax expense which you have provided. Now, what is the profit after tax? Profit after tax is 546 minus 163, which gives you 382.20, right. Now, this tax expense is not given in trial balance. This is a provision we have created based on additional information. This will have a second impact, that is in the short term provision. How much is the provision for tax? We had calculated 163.8. Okay, so this is what you will show under short term provision, and this 163.8 will have to be shown 163.8, right. That is what is to be shown here, right. Now we are done with this. Now coming to the additional information, we have given both the impact of this. So this is also done. Depreciation also two impact is given, one in the P&L and other in the balance sheet. Equity share capital includes shares of 50,000 issued for consideration other than cash. See, we forgot to give a disclosure for this. So you have to give a disclosure for that. Out of above, 50,000 issued for consideration other than cash. So 5,000 shares have been issued for consideration other than cash. See, unless you keep on taking, you will not be able to figure out that you have missed out something. Okay. So this is a disclosure item. This is taken care. Revaluation is taken care. Authorized share capital also we have taken care. Right. Provision also both the impact is given. Trade receivables also we have disclosed separately. Schedule and unschedule also we have disclosed separately. Now, what do we do? P&L balance we have to update here. Current year balance. How much is the current year balance? 382.20. Current year balance is 382.20. So what is the closing balance of this? 75 plus 382.20, you get 457.20, and revaluation reserve is 160, right. So what is the total of this? 150 plus 40 plus 457.2 plus 160, that is 807.20. Where do we take this balance? This balance will be plotted to the balance sheet, 807.20, right. So let us total this up now. 495 plus 807.2 plus, please do it on the calculator along with me, 300 plus 30 plus 163.8, which is 1796, and here if you do the total, 590 plus 96 plus 120 plus 30. See, I have done a mistake here. I took only 590 as property, plant and equipment, whereas it should have been 960 plus 590. So 590 plus 960, which is 1550. Okay, so don't do that mistakes in the examination. While teaching also we can make mistakes, while doing in practical life also we can make mistakes. So don't do that mistakes in the examination. This should be 1550. Okay, so you get 1796 and 1796 the balance sheet. So you get 1796 here also 1796. Balance sheet ultimately will be tallied. There is no problem. Okay. Now if you follow this structured approach, right? If you practice it in a structured approach, you will not lose out on marks in these kind of questions in the examination. This will be easily a 16 marks questions in your examination. So what you need to do is, follow-up framework, follow a pattern in which you have to solve, and don't do mistakes in calculating, totaling, copying number from one place to another. Okay, take enough space, give enough space. There is no shortage of paper. If you have to save paper, you can do it at other places, but here please do not hesitate to take additional papers, leave sufficient space, and then solve the question. It will be perfectly done. Let's have a look at a question on managerial remuneration from RTP May 22. The following is the extract of balance sheet of Jupiter Limited as on 31st March. Okay, right. So they have given equity and liabilities, authorized capital, preference shares, equity issued, subscribed capital. All of those details are there. Then you have something called as share suspense account. Now, what is the share suspense account? We'll look at the additional information and figure out what does it mean. Then we have reserves and surplus, capital reserve, of which 60% is revaluation reserve. Then securities premium, you have loans, unsecured loan, public deposit, cash credit loan, current liabilities, trade payables, and you have assets. Investment in shares, debentures, P&L account, preliminary expenses not written off. Now generally speaking, this P&L item will be a negative item on the liability side, and this preliminary expenses will have to be written off. Okay, there you will not get a balance sheet where preliminary expenses have not been written off, because then it will be a non-compliance with the accounting standards, right? But these are maybe ledger balances is what you can consider, right? Then coming to the additional information, share suspense account represents application money received on shares, the allotment of which is not yet made. Okay. Now when we compute effective capital under managerial remuneration, we know that share application money will not be considered. Then Jupiter Limited has been incurring losses, obviously, because there is a P&L debit balance and it has only one whole-time director. Okay. You are required to compute effective capital as per provisions of Schedule 5 of the Companies Act of 2013. Would your answer differ if it is an investment company? So basically, like we have seen in other problems, for a normal company we have to compute the effective capital. For an investment company we have to compute the effective capital. Also calculate the amount of maximum remuneration that can be paid if no special resolution is passed at the general meeting of the company in respect of a payment for a period not exceeding 3 years. So basically, if special resolution is not passed, we will apply the limits based on the effective capital, right? So first let us compute the effective capital, and then we will see what will be the limits which are applicable. Now as far as the computation is concerned, pretty simple. You have to take what will be the total capital. From that, if it is a normal company, you will exclude investments. If it is an investment company, you will include investments, right? So let us get into that. Particulars, non-investment and investment. Or the other way to do is, to save time, you can calculate for non-investment, and at the end you can add investments to get the effective capital for a investment company. Okay. Now what do we have? Authorized is not required. Issued and subscribed capital, 14% preference shares of rupees 100 each fully paid up. Will it be a part of the capital? Yes. So you can say preference share capital. How much is the amount? 30 lakhs. So 30 lakhs. For both the cases, it will be 30 lakhs. If you want to save time, you can use rupees in lakhs, and then you can do the calculations. Okay. Then equity shares of rupees 100 each, 80 paid up. So will that be a part of it? Yes, obviously. So equity share capital will be a part of your effective capital, which is, how much was that? 1 crore 92 lakhs. 1 crore 92, 1 crore 92 lakhs. Then share suspense account. Will we include share suspense account? We will not include, because that is share application money not yet allotted, right? Then reserves and surplus. Capital reserve. From this you will exclude revaluation reserve. We have understood that revaluation reserve will not be considered while calculating the effective capital. How much is that? 5 lakhs. 60% is revaluation, which means 40% is normal capital reserve. So 40% of 5 lakhs. 2 lakhs, here also it will be 2 lakhs. Then securities premium will be considered. How much is securities premium? Securities premium is 1 lakh. Then secured loans, 15% debentures. 15% debentures, will it be considered? Yes. 15% debentures. How much is that? 1 crore 30 lakhs. 1 crore 30, 1, 2, 1, 2, 3. Then we have public deposits. Now public deposits is 7,40,000. Will that be included? Yes, that will also be included, because that is a part of your long-term loan. 7,40,000. 7,40,000. Then we have cash credit. Please remember, short-term arrangements, cash credit, overdrafts, all of these will not be considered while calculating effective capital. So you will not consider cash credit, and trade payables being a current liability, you will not consider, right? Then Let's total this up. So 3000 plus 19200 plus 200 plus 100 plus 13000 plus 740. I am just excluding the last 3 zeros for your, it will be easy for you to calculate. You get 3 crores 62 lakhs 40,000 as the total. Both of these total are same. From this, you will deduct investments only in the case of non-investment company. How much is the investment? 1 crore 50 lakhs. So minus 1 crore 50, 1, 2, 3, 1, 2, 1 crore 50 lakhs. Here you will not reduce. Okay. And as I told you, if you want to save time in the examination, first calculate for non-investment company and at the end add investments to arrive at the effective capital, or calculate for investment company and reduce the investments to arrive at the effective working capital for a non-investment company. Less investments, P&L debit balance and preliminary expenses, both of them have to be deducted. So P&L debit balance, how much is that? 30 lakhs 50,000, 30 lakhs 50, 1, 2, 3, and preliminary expenses not written off 1 lakh 10,000, right? Total. This works out to 1 crore 81 lakh 60,000 and this works out to 31 lakh 60,000. So what is the effective capital? Effective capital is 3 crore 6240 minus 18160. Here it is 1 crore 80 lakhs 80,000 and here it will be 3 crores 30 lakhs 80,000. This is what is the effective capital. Very simple and straightforward question, nothing much which is complicated. Then the question says, what will be the maximum remuneration which is payable? So what is the next part of the question? If special resolution is not passed, what is the maximum remuneration payable? Now here, what is the effective capital? Effective capital is, since effective capital is less than 5 crores, maximum remuneration payable is 60 lakhs. In each of the cases, you can pay to the maximum of 60 lakhs, right? A very simple question, generally asked for about 6 marks to 8 marks, and if you know what to include and what to exclude, you will get marks out of it, right? So only thing here that you need to take care is share application money should not be considered and revaluation reserves should be excluded while calculating effective capital. Let's now have a look at a question on pre and post incorporation from RTP May 22. Pretty simple question. The only complexity here would be calculation of the ratio, right? The partners of Shamsher converted their partnership into a private limited company named so and so with effect from 1st of January of 2020. Okay, that is the effective conversion. That is the date of effective conversion, and it was incorporated on 1st of June of 2020. So, what is the incorporation date? 1st of June of 2020 is the incorporation date. The purchase consideration amounting to rupees 11,40,000 was payable later at interest of 12% per annum. So, you have to pay 11,40,000 of purchase consideration along with interest. To make the payment of purchase consideration and to meet the working capital requirements, a loan worth 17,10,000 at 10% per annum was availed on 1st of June of 2020 and payment for purchase consideration was made. So, if you look at this question, too many dates here. 1st of January is when the business was taken over. What is the date of incorporation? 1st of June. So, from 1st of January till 1st of June or 31st of May, please note it's only 5 months, not 6 months. This 5-month period is the pre-incorporation period, right? Now, in this 5-month period, the consideration was not paid. When was the consideration paid? Consideration was paid on 1st of June by taking a loan, right? So, you need to calculate interest up to 1st of June on the purchase consideration which was payable, and after that, based on the working capital loan that was taken, whatever is the interest that has to be provided for, okay? Then, the company obtained a building on lease at a monthly rent of rupees 19,000 on 1st of July. And one more date. From 1st of July, they have taken a building on lease, and the following is the information for the company as on 31st of March 21 for the period of 15 months. So, normally we see 12 months question. This has a period of 15 months. So, let's have a look at the information. Sales is given, that's fine. Then you have cost of goods sold, discount is based on the sales. Directors remuneration, post incorporation. Salaries, we have to divide it on the basis of time ratio. Rent, we have to do a calculation considering the new lease premise that has been taken. Then interest, 1,99,500. For this also we will need to prepare a detailed working note. Depreciation, office expenses, sales promotion based on sales. Preliminary expenses, it's only for the company, and the profit is given. Now, coming to the information. Sales between June 20 and December 20 were 2.5 times of the average sales, which further increased to 3.5 times in January to March quarter 21. So, too much of information. We have to carefully put down the numbers for this. Only then we will be able to solve this, right? Salaries from July 20 doubled. So, whatever is the salary payable from July 20, it has doubled. Prepare a statement showing the calculation of profit or losses between pre-incorporation and post-incorporation periods. So, now in this question, the most trickiest part is obviously calculation of the sales ratio. Time ratio also we have multiple, okay, one is pre-incorporation, post-incorporation. For salaries we can directly do, considering the months up to June, whatever is the salary, for the month of June what is the salary, and from July onwards what is the salary, we have to do it separately. And please note, it is not 12 months, it is 15 months financial statements, and accordingly we will have to split up, right. So, simple question, don't get bogged down with the, the details of numbers available. We will prepare the working notes that are required and then we will solve the question. So, let us prepare the working notes. What is the first one? Time ratio. Now, time ratio is pretty simple. How much is the pre-incorporation period and how much is the post-incorporation period? Pre-incorporation, post-incorporation. How much is pre-incorporation? From January till 31st of May, only 5 months. So, 5 here, and after that till 31st of March of 21. So, the balance 10 months. If you are getting confused, you can count June, July, August, September, October, November, December, 7 months in that, and January, February, March, 3 months in the next period, you have 10. So, your ratio will be 1:2. The ratio will be 1:2. So, this is the time ratio. Then, sales ratio. Now, what is the sales ratio? You see the statement, it is quite complicated. Sales between June 20 and December 20 were 2.5 times of the average sales, which further increased to 3.5 times in January to March quarter 21, right. So, there are multiple ways of interpreting this. The best way to do this is say or assume for a moment that the average sales per month would be X. Average sales per month would be X or 1, okay. So, assume it to be 1, right. Now, we need sales from which period to which period? We need sales from January to May. What does the question say about till May? Nothing is told. So, sales up to May is how much? For 5 months, 5 will be the sales, right. Then, sales from June 20 to December 20. June 20 to December 20 were 2.5 times the average sales. So, 2.5 times of the average sale, 2.5 multiplied by 1 multiplied by 7. Why 7? From June, July, August, September, October, November, December, right. For 7 months, 2.5 times. So, this is 7 multiplied by 2.5 times, which is 17.5. Then, sales from Jan 21 to March 21 is 3.5 times. So, 3.5 times multiplied by 1 multiplied by 3, which is 3.5 multiplied by 3, that is 10.5. So, post incorporation sales is 17.5 plus 10.5, that gives you 28. Pre-incorporation sales is 5. So, what is the ratio? Ratio is 5:28. The sales ratio is 5:28, right. So, you have calculated the sales ratio. Now, let us start solving the question. Sales basis is 5:28. What is the total amount given? Total amount is 37,62,000. Now, friends, we can start directly from the gross profit, but because information of sales is also given, start from sales. 37,62,000. So, 37,62,000 is the sales. How much will be pre? 37,62,000 divided by 28 plus 5 is 33 multiplied by 5. So, you can do it on the calculator alongside, which gives you 5,70,000. And what will be the post? 3762 minus 570, post will be 3192. Then, less cost of goods sold. What is the basis again? The basis is 5:28, that is the sales ratio. 2257,200. 2257,200. How do you do that? 2257,200 divided by 33 multiplied by 5. You get 3,42,000, and here it will be 2257,200 minus 342, that is 19,15,200. Okay. Then you have discount. Now discount is on sales, so it has to be on the sales basis only, which is 5:28. Amount is 87,780. Again here 87,780 divided by 33 multiplied by 5, 13,300, and balance will be 74,480. Then next item is director's remuneration. This is purely post. What is the total? 1,14,000, 1,14,000, pre-incorporation 0, post-incorporation 1,14,000, right. Then salaries. So for salaries we need working note number 3. Why working note number 3? Because at a different point in time salaries have changed. Salaries from July 20 doubled. So from July 20 is when it has doubled, okay. So let us prepare a working note. Let salaries from Jan 20 till June 20 be X. So salaries from Jan 20 to June 20 be X per month. Every month we pay X. From July 20 till March 21 it will be 2X per month, correct. So if you solve this, total salary is equal to how much? X per month from January till June 20. So Jan to June is 6X plus after that it is 2X. So from July till March 21, 9 months, 2X multiplied by 9, okay. So that is the total salary. How much is the total salary? The question mentioned total salary as 171,000. 171,000 or 1,71,000 is equal to 6X plus 18X, you get 24X. X is equal to 1,71,000 divided by 24, which is 171,000 divided by 24, you get 7,125. So pre-incorporation salary. Now in the examination, don't take 6 months and multiply with 7125 because pre-incorporation salary is only for 5 months. So it will be for 5 months only. That is 7125 multiplied by 5, 35,625 is pre-incorporation. Post-incorporation will be for how many months? It will be 1 month at 7125 plus from July onwards, that is for remaining 9 months, it will be 9 multiplied by 2 multiplied by 7125. So if you do that, 7125 multiplied by 9 multiplied by 2 plus 7125, you get 135,375. Now if you don't want to do this complex calculation, not very complex actually, 171,000 minus 35,625, if you do, you get 135,375. Either ways it is fine. So here we get 35,625 from January to May end. So here what is the total? 171,000. From January till May end it is 35,625, and for the balance period post incorporation, this minus this, it is 135,375. that is for salaries, right. Then now rent. Now when it comes to rent also we need to prepare a working note because an additional premise was taken on rent. So we will prepare one more working note. Working note number 4, rent, right. What is the total rent? The question mentions total rent to be 256,500. 256,500. Now from this, now what is the new premise? It says the company obtained a building on lease at a monthly rent of 19,000 on 1st of July. So from July till March, July, August, September, October, November, December, and March, from January to March, 3 months. For 9 months, company is paying 19,000 per month. This is in addition to the earlier rent. So 19,000 multiplied by 9 months, you get 171,000. This is post incorporation only, right. So what is the balance rent? 256,500 minus 171, you get 85,500. This you have to allocate in time ratio of how much? Of 1:2. Of 1:2. So pre-incorporation is 85,500 divided by 3 multiplied by 1. Post-incorporation is 85,500 divided by 3 multiplied by 2, right. So total post-incorporation will be 57,000 plus 171,000, which is 2,28,000. Very simple, right, nothing complicated. Total is 256,500 and here we calculated pre-incorporation 28,500 and post-incorporation this minus this 228,000. Okay, then rent is done. After that interest. Now interest, they have said total interest is 199,500. Total interest is 199,500. Now for this also we will need to prepare a working note. Working note number 5, interest, right. What is the pre-incorporation interest? The question says purchase consideration of 11,40,000. When was it due? It was due from 1st of January till the time it was repaid. When did they repay? They availed a loan on 1st of June to repay it. So from 1st of January till 31st of May, that is for 5 months on 11,40,000 at 12%. So 11,40,000 at 12% for 5 months. So 11,40,000 at 12% for 5 months, which is 11,40,000 multiplied by 12% multiplied by 5 divided by 12, you get 57,000. This is pre-incorporation. Then post-incorporation, how much is that? The company had taken loan of 17,10,000 at 10%. So 17,10,000 at 10% for how many months? 10 months, which is 17,10,000 multiplied by 10% divided by 12, don't divide by 10, okay, multiplied by 10, you get 142,500. So 57 and 142,500, 57,000 and 142,500, right. So if you sum this up, 57 plus 142,500, you get 199,500. Is that what is given in the question? 199,500, right. Let's move to the next item. The next item is depreciation. So depreciation is simple. Depreciation will be on time ratio. What is the time ratio? 1:2. How much is the total depreciation? Total depreciation is 57,000. So 57,000 divided by 3 multiplied by 1 is 19,000. So this will be 38,000. Okay. For simple things, always don't use calculator. It will save some time in the exams. Then we have office expense and sales promotion expense. Office expense, because nothing is mentioned, time ratio again 1:2. 1:2. And how much is the office expense? 199,500. See, coincidentally, this also is 199,500. This also is 199,500. Don't get confused in the exams. 199,500. So this divided by 3, 66,500 and 199,500 minus 66,500, you get 1,33,000, right. Then sales promotion expenses. This will be on the ratio of sale. So sale ratio is 5:28 and total sales promotion expenses is 62,700. So what will you do? 62,700 divided by 33 multiplied by 5, you get 9,500, and 62,700 minus 9,500, you get 53,200. Then you have preliminary expenses. This is only post. How much is that? 28,500. 0. Everything is post 28,500. Right. So this is how you allocate. Once you are done with the allocation, it's just a basic calculation. So net profit. Right. This is given. The first one is already given in the question. 328, 320. Right. So here pre, how will you do? 5,70,000 minus 3,42,000 minus 13,300 minus 35,625 minus 28,500 minus 57,000 minus 19,000 minus 66,500 minus 9,500. You get negative of 1,425. That is a loss. This is a loss. So you can say here net profit stroke loss. Loss in the pre-incorporation period, and in the post-incorporation period you have a profit of 329,745. I am not doing a detailed calculation, you can calculate on your own, right. In the exam, just what you do is, to ensure that you don't make a mistake, compute each of these separately. Don't do 328, 320 plus 1,425 and then 329,745 plus 1,425 or minus 1,425 in this case, 328, 320. So this will be a cross check for you, okay. So slightly lengthy question, but if you do this kind of question once, then means you have understood pre-incorporation and post-incorporation related chapter.